Okay, let's have a look at the euro dollar for the 2nd of November 2015. My first trade was off the base of this channel, activated here, wore a little bit of heat and then pushed off. The market didn't really run. We had a range. It traded for the first 35 minutes. Then when it hit the top of the range, there wasn't a substantial pullback at all. It pushed through without a pullback. That is, from experience, the end of the move. If there are no pullbacks and it pushes strongly, it's generally a reach for the price. I look to take profit at the earliest convenience after that. Alright, let's have a look at the channel. C-click. Now that's the take profit. You can be more conservative and pull back to this shoulder, up to you. I used that high through there and took profit in this wick. Okay, so there's a 22 pip run. Now your trigger was there. Now let's look at the practical reality of trading. You've just had a long reach its take profit at this point. Generally, I do a post-mortem. Often doing a post-mortem on my previous trade means that I miss triggers or bounces at the same point. Now, if you missed this bounce, you didn't have an entry order there, or you did not take a manual trade, then you would be looking through this point. So the market reached up, bounced on the trigger, went down to here, failed, reached back up. This bottom of the channel here on the low of this bull candle is your safety valve trigger. So if it reaches back to that value, take a trade and take the run. Okay, for our purposes, we'll look at that being the trigger, but you could just as easily calculate it off the low of this micro channel here. Okay, let's analyze the move. Now, once again, we look at the move from its outset and say it came from there. We're expecting it to go down here. Now, we don't get significant pullback through here. We do have a slight wick there. That would be as far as I would go in relation to expanding my channel. There's the last channel. You could go down as far as this low, but once again, we're conservative and take profit early. Okay, so there's your take profit. And it's a 29 pips or 28 pips for that run, which brings you at 50 neat just into London. I took a entry order through this low from that previous channel analysis. I didn't take profit. Greed is not necessarily good. If we look at the move, I was hopeful of the move going higher, and as always I'm looking for a much stronger move and hopeful of a reversal, but I didn't take profit through there. I did, however, take a short based on, just clear the chart, based on this bounce through here. Okay, so the short trade, it too didn't go too far. There's your standard channel. That's where it came from. I was expecting a longer move. Now, obviously, there were significant bounces in this area here. Up to you where you took your channel from. I would review this element here. And look at the 50% through there. So the close of that bear candle would be a good bounce point, or good 50% point. You can see it's supported by the base of this channel. So hide your channel, take profit there. Okay, now I didn't, and because I didn't, I also didn't have a long in this run up. Okay, next trigger is this shoulder here. Do the channel to determine that. Okay, so we're looking at about somewhere between there and there. The last big bounce was off this shoulder, so we've determined entry order off there. The market oscillates a bit, then runs. Okay, very difficult analyzing something like this. There's no reach out point like here or here or here where you can clearly determine a 50%. There's no strong point here either that allows you to look for 50% of your channel. And so in this case, let's put a channel through here. There's your first bounce point. There's your take profit. Now up to you. You could wait for some movement, some failure of the move, but the take profit should have been there. Which is 23.5, so 22, which brings you up to 72. Just with the shorts, it's very hard to determine a 50% in a drift like this. Okay, now we're expecting the market to bounce here, and it's up to you. You can either take that trade through there by way of entry order, or if you miss it, you can go through and wait for a pullback to that level, which it goes through a little bit further. But for the purposes of this discussion, put your entry order there. The market drifts up. The only reference point you have that is solid is that last channel. There's not a lot of support here, so there's no confidence. I would be tucking my or readjusting my take profit in through to these lows. Any failure of this point, the market has moved 24 pips. That's a relatively good gain. I would expect a pullback sometime soon, so tightening up your take profit to this point would be my recommendation after the pullback to this low. So it's 24.5 pips, that's 23 pips. Brings you to 95 pips. That was me finished for the session. Hope this was beneficial. I haven't gone through and had a look at the US session with you. No great activity. So most of the fun was in the early European session. Hope this breakdown has been helpful. Have a great day. Good trading.